Welcome back to another video. Soil here, and today I want to talk about rectangle pattern. We're going to see how we correctly identify this pattern and how we effectively trade based on rectangles. Stay tuned and let's get started. As the name indicates, this pattern looks like a rectangle. Rectangles are also called trading ranges, flat market, consolidation period, or congestion area that some traders use to describe or refer to this pattern. In this video, we just call it rectangle. In the core of this pattern, which is a rectangle, we have two parallel lines that make the top and bottom of our rectangle. For drawing any line, we need at least 2 points. So to draw the bottom line, we need at least 2 swing lows, approximately at the same level. And for drawing the top line, we need at least 2 swing highs, approximately at the same level. The top line is actually a resistance level and the bottom line a support level. And please pay attention that they are not necessarily a line and they can be a zone. If you're not familiar with support and resistance levels and how to correctly identify and draw the lines, I have a video on this. I also put the link in the description of this video and I recommend you to watch it later because support and resistance levels are the essential part of technical analysis. Alright, getting back to our rectangle. Rectangle is a continuation pattern, which means that it forms in the middle of a trend. It's actually a pause in the middle of a trend, and after that, the trend continues. Actually, the pattern is complete when a breakout happens, so we wait for the breakout, and it can happen either up or down, but statistically, there is more probability to have the breakout in the direction of the prior trend. As I said, the pattern is complete when the breakout happens, and we don't determine the direction of the breakout beforehand. So for this pattern, the first thing that must exist is a trend, a prior trend. And please pay attention, the more mature the trend, I mean the longer the trend in place, there is less probability for the trend to continue after the rectangle. And actually in mature trends, the rectangle can be the starting point of changing in the direction of the price, and we have more probability to have a breakout in the opposite direction of the prior trend. Then next, we have a pause in the middle of the trend in the form of a rectangle. As I just explained, it can be identified by at least 2 swing lows that makes the bottom of line, which is a support level, and at least 2 swing highs that make the top line, which is a resistance level. And in the ideal situation, the highs and lows alternate. In rectangle, we don't have any strict pattern for the volume, and the focus is on the breakout point, which we must see expansion in the volume. Increasing of the volume when the rectangle is developing rarely happens, and most of the time we see the volume in spiral moves depending on its advancing to resistance level or its declining to support level, or we may see it declines when the pattern is developing. If the volume gradually declines when the rectangle is forming, it makes the rectangle neutral and it's better to see considerable expansion on the breakout. And if you have the volume in spiral move, you can analyze the volume to see if you have more volume on advances to resistance level or more volumes on declines to support level. This can give you some signals on the future direction of the breakout, but as I said, we wait for the breakout, and these patterns in the volume is just used for more confirmation of our trading decisions. And also pay attention that the longer the pattern, the stronger it becomes. It means that the longer these support and resistance levels hold and the rectangle continues in time, the more significant becomes the breakout, and the breakout must be a valid breakout, which means that the price must close out of the rectangle and we must see expansion in the volume for confirmation. One possible target for the price is the height of the rectangle. The height of the rectangle is measured and it's added to the breakout point or subtracted from the breakout point in the case of downtrend, but that's only a projection based on this pattern, and you must carefully watch the price action for not losing the larger move if that's the case. Please pay attention that many of the times after the breakout, the price turns back and retests the broken level, and after that continues in the direction of the trend. This provides you high probability trade with minimum amount of risk. Many conservative traders use pullback strategy. They wait for the price to retest the broken level, and after that, when the price turns in the direction of the breakout, they enter a trade. Sometimes the breakout is a false breakout, which itself is a trading strategy, and some traders use it for trading in ranges. You must also consider this when trading on the breakout points. Most of the time, this happens when the breakout is not a valid breakout. For example, you may not see significant increase in the volume, or the closing candle may not be significant. That's because of these false breakouts that conservative traders prefer to wait for a pullback and retest of the broken level to enter a trade with higher probability of not getting caught in a false breakout. And traders can also take advantage of the rectangle itself for trading in the cases that the rectangle is well developed. You can effectively take advantage of the bounces and falls for short-term profits, but you must pay attention that you are in a consolidation period and finally a breakout happens in either direction, and you must prepare yourself and have the required measures for your risk management strategy to limit your losses for that case. And I must repeat this again one more time, that having a rectangle in the middle of a trend doesn't necessarily mean that this is a continuation pattern and we're going to have a breakout in the direction of the prior trend. The breakout can happen in either direction, up or down, because the price is in a consolidation period, and just statistically there is more weight to have the breakout in the direction of the prior trend. But it's just a possibility, and forming a rectangle on the chart can also be the starting point of a reversal. So you must wait for the breakout, and a valid breakout completes this pattern. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.